It's Thursday, the 7th of October 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Regulators step in to cool the housing market. That is our main story this morning. Also today, New South Wales set to reopen, Victorian Premier Daniel Andrews in the spotlight, and Australia's managers feel the heat over the environment, social and governance issues. Then stay listening for Sean's chat to John Winters, co-founder and CEO of trading platform Superhero. But first, Sean, the Prudential Regulator has moved in to cool the Australian housing market, making lenders increase the serviceability buffer that they use to assess loans. What's that actually mean for borrowers?
Well, Michael, the Australian Prudential Regulation Authority said lenders must use a higher interest rate to assess whether a borrower can repay a loan. So, if you take out a loan at an interest rate, say, of 2.5%, the lender now can only give you the money if they're confident you could still repay if the rate went up to 5.5%. In effect, it means a typical borrower will reduce their maximum borrowing capacity by around 5%. May not sound like much, but if you have $250,000 in savings and a stretch to get a $1 million loan, this new rule comes in, then you won't be able to get that loan anymore.
We've spoken about this previously when regulators were flagging a whole range of different options. So is this just the tip of the iceberg? Will there be more changes coming?
It depends a bit on how this one works out, and APRA said the new rules will have a fairly modest overall impact on housing credit. It will only apply to new home borrowers, so if you already have your money, no need to worry. But it certainly sends a clear message to the market, that's lenders and borrowers, that things could get tighter, and that will certainly provide pause for some people. It also signals that if things don't slow down, and we've seen house prices up by 20% across the country, 29% in Sydney, regulators are likely to do more, something like changing rules around the size of a home loan versus annual income. They'll do that to slow the market. And remember, back in the June quarter, 22% of loans written were at more than 6 times a borrower's income, and that's a record.
That's extraordinary. So the big question is, though, what does it actually mean for property prices?
Well, it should slow the rises, something we've been expecting for months, and it hasn't really happened, maybe a little bit in Victoria. There's also other things going on in the market at the moment, affordability challenges, for example. Put all that stuff together, it will combine to take some of the steam out of the housing market. Having said that, many market watchers still think house prices will rise over the next year. Maybe not by 20 or 30%, more like 5 to 7%.
So away from property, how did markets perform yesterday?
Well, the S&P ASX 200 fell 0.6%. That was on top of the losses the previous day. Commonwealth Bank led the market lower again, finishing down nearly 2%. ANZ was off more than 1%, while Wesfarmers was another poor performer. It fell 1.3%. Some of the tech stocks, including Afterpay and REA, outperformed, as did the insurers, QBE and Insurance Australia Group. One company I just want to point out is Whitehaven Coal. It's continuing to enjoy a renaissance on the back of much higher coal prices, plus a much, much stronger balance sheet. Whitehaven's share price has more than tripled since the middle of May. Tripled. Incredible. It was up another 4% yesterday. Away from equities, Michael, the Aussie dollar is trading around 72.8 US cents. Brent crude fell overnight, but it's still around $81 US a barrel. That's certainly helping the energy stocks. And gold is worth $1,760 US an ounce. Now, one other thing, natural gas prices hit a 7.5-year high overnight, but then fell back sharply after Russian President Vladimir Putin said his country would increase supply to help stabilise energy prices.
All right. And what about global markets?
The volatility on Wall Street continued after reports that Republicans may agree to a short-term US debt limit extension. After falling more than 1%, the S&P 500 in early afternoon trading had recouped all those losses and was slightly higher than where it started, while the Nasdaq 100 was up 0.5%. It was a rough session for European markets, with several major indices, including London's FTSE and the German DAX, down more than 1%. There are still plenty of fears about inflation in the euro region, and that's triggering the volatility.
We'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning. New South Wales is set to reopen from Monday after the state hit a 70% vaccination rate yesterday. Great news for the state.
And everyone living in it, Michael. It sure is. The new Premier Dominic Perrottet and his incoming Deputy, Paul Toole, made the announcement as the number of cases in the state fell below 600 for the first time since the middle of August. Almost 90% of the state has now had one dose. In Victoria, the number of cases recorded was 1,420 yesterday and 11 deaths. With the CFMEU cluster, that's the one that occurred when violence broke out in front of the union's headquarters a couple of weeks ago, it continues to grow. There's some good news from travellers, though. The border closure between Victoria and New South Wales is going to be relaxed. The ACT recorded 28 cases. 95% of Territorians have now had one jab, and 2/3 are fully vaccinated. And fortunately, there were no new cases in Queensland.
Now, I think this statistic is pretty remarkable when you think about where we've come from. Almost 30 million jabs have now been administered across the country.
I couldn't agree more. It is incredible. More than 80% of people over the age of 16 have had at least one jab, and 59% are fully vaccinated. If you think about where we started, where we were just 3 months ago, pretty incredible figures.
Yeah, we really have caught up, haven't we?
We really have. We're at an 80+% one jab rate and a 59% double jab rate. So that's 80 and 59. The UK is at 73 and 67. The US is at 65 and 56. And Europe is 68 and 63%. By the end of this, we're going to have one of the highest vaccination rates in the world. We really are a compliant bunch.
Yeah, we certainly are. Now, in Victoria, Sean, Premier Daniel Andrews is under attack about reports he's part of an ongoing investigation by the state's independent broad-based anti-corruption commission.
Yes, that's the equivalent of ICAC in New South Wales, which was the cause of Gladys Berejiklian to resign last week. The Age yesterday reported that the Premier and a senior public servant was being examined over their roles in controversial deals which benefited the Firefighters Union and its boss, Peter Marshall. Mr Andrews wasn't commenting yesterday, but it's made me think, who would want to be a Premier at the moment? Fronting cameras every day around COVID, inquiries into their behaviour, a voracious opposition. Pretty tough job. It's a bit early to say if anything will come out of this. There's certainly plenty of smoke, but I'm not sure how much fire there is.
Yeah, we'll see. And I mentioned this one at the top of the show. We're heading into annual general meeting season, and Australian businesses are really starting to feel the pressure to improve around ESG issues.
Very true, Michael. A survey by research group FTI Consulting says that 1/3 of business leaders globally felt under extreme pressure to improve their commitment to environmental, social and governance outcomes. In Australia, that figure was 30% of the companies surveyed. ESG has really shifted from a tick-in-the-box exercise to being part of the business outlook. Yesterday, Telco TPG said it would power its entire operations by renewable energy, i.e. be carbon zero, within 4 years. Telstra has promised to halve its emissions by 2030. The big retailers are installing solar panels on rooftops to run stores. The miners, led by Fortescue, are working really hard to provide a feasible plan to reduce emissions. Banks are under pressure not to lend to fossil fuel companies. The oil and gas giants are merging to create scale to help them decarbonise. It is an amazing transition within the global and Australian economy.
Sean, what's making headlines in today's news media?
The Financial Review is reporting that the federal government needs to become a financier of last resort for the mining sector via the creation of a $250 billion loan facility if it wants the national support for net zero emissions by 2050. That's according to Resources Minister and Senior Nationals MP Keith Pitt. Media outlets are reporting this morning that East Coast offices will continue with ultra-low occupancy rates for the rest of this year. That's according to the Property Council of Australia. Sydney CBD is currently at just 4% occupancy. Melbourne's at 6% and Canberra is sitting at 8%. And France will send its ambassador to Australia back to Canberra following the dispute over the sinking of the $90 billion submarine deal last month. It's a welcome softening of tensions between Canberra and Paris.
Running through some of the other stories around today, the Wharfies Union has been forced to lift its month of rolling strike action at the Port of Melbourne after a coronavirus outbreak required 1/3 of the workforce to isolate. The Wharfies had planned to strike every Monday, Wednesday and Friday.
One of the country's biggest listed investment vehicles, Regal, has raised $212 million from investors. Now, investors put their money into LICs, which then invest in listed stocks. So if you buy into a LIC, you're buying into the ability of its management to outperform the market, and Regal Investment Fund certainly has plenty of friends.
Now, the A2 Milk Company, which is one, Sean, that we've spoken about plenty of times, really because of how poorly it has performed. It's actually been the worst performing stock on the top 200 over the past year, down 57%, including nearly 7% yesterday, said it's going to defend a class action filed by Slater and Gordon. The class action is on behalf of shareholders who bought stocks over a 9-month period, during which the infant formula maker announced 4 earnings downgrades. Pretty remarkable.
No wonder they're upset. And finally, former Prime Minister Tony Abbott is in the news again. He will meet Taiwan's president in a rendezvous sure to upset Beijing. Mr. Abbott has been a vocal supporter of Taiwan's bid to join the Trans-Pacific Partnership Regional Trade Pact. He'll meet the Taiwanese president later this week.
All right, and what's the key overseas news this morning?
As you know, Michael, one of the key targets for China is that its steel industry hit zero growth production this year. That's actually the main reason iron ore prices went from more than $230 a tonne back in May to less than $100 a tonne last month. Well, Macquarie Group has now estimated that China has achieved that goal. That's really good news because it means no further cuts, and that's good news for the local iron ore producers. Also, the Reserve Bank of New Zealand has raised its official cash rate, becoming just the second developed economy behind Norway to do so. New Zealand is fighting high inflation and a surging property market, and the Reserve Bank of New Zealand, unlike the Reserve Bank of Australia, has explicit responsibilities to keep a lid on house prices. Its official cash rate is 0.5%. Now remember, the local cash rate is just 0.1%. And finally, yesterday I said the Ashes cricket series was under threat. Well, England captain Joe Root came out and confirmed he'd be coming and expected a full-strength squad to arrive in Australia. Something to look forward to.
Yeah, good news. And we've got a bit more on that one as well in our newsletter, which you can subscribe to at fearandgreed.com.au. Now, Sean, up next is the Daily Interview. And today you're talking to John Winters, co-founder and CEO of trading platform Superhero.
I am. It's a really interesting conversation. John's platform Superhero is very cheap. And they're also launching a super fund whereby if you're part of that super fund, you can buy and sell shares yourself. So just an interesting model, particularly in the super area.
Yeah, something a little bit different. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thanks, Michael. Have a great day.
It's Thursday, the 7th of October, 2021. Make sure you're following the podcast. Join us online on LinkedIn, Twitter, and Facebook, and sign up for that daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.